Welcome everyone to Vested Interest. This is Shane, and this is our weekly portfolio update. We will cover the $1,451 I added to the portfolio and some change I added to the portfolio, as well as the positions bought with those funds, any dividends received, any options we were in for the week. That's what we do every Sunday, typically in the morning around 7:30. But before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos. And a special thank you to those who subscribe to the channel. I really do appreciate it. And for those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio on a weekly basis. I also do larger purchases if I get a bonus or have some extra funds from a side job, something like that. I do cover all my investments into the portfolio on this channel. Again, that's what this video is about. We do this every Sunday. It's free to see what I'm doing. I don't have any paid Patreon account or any other links I'm trying to send you to, or any thing you need to sign up for, or any websites you need to go sign up through. But if you would like to help out the channel, if you could do me a big favor and hit that thumbs up button down below if you find any value in the content, if you are a dividend growth investor, make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click that subscribe button down below. Hit that notification bell so you're notified whenever we put out any new content. Along with this weekly portfolio update video series, I do a stock pick of the day series Monday through Thursday whenever the market's open. Where we take a look at a stock that's pulled back on the day. It's the stock pick of the day series. So tune back in for that one. Another reason to hit that notification bell down below. And if you'd like to buy me a cup of coffee and say thanks for the effort here, go ahead and click that thanks button down below. You'll find several different tiers down there. Appreciate everyone who can do that. Understand those of you who cannot. Times are tough for all of us. Things are a little bit more expensive. I think we all recognize that. But a special thank you to all the subscribers out there. If you can, just the other things above, that thumbs up, the subscribe button, the notification bell. If you can't hit that, thanks. Those will do just fine. And drop a comment down below. Let me know what you were adding to your portfolio. A lot of positions right now at 52-week lows. Love to hear what you're looking at adding, or maybe what you're watching to continue to drop lower, or what you're selling. Love to hear from you in the comment section, whatever you'd like to drop down there. Now let's get into the activity. No options to speak of this week. Now we do throw out options every week. It's just a matter of whether someone accepts the other side of the options on an options contract. There's two sides, the person writing the contract and the other side, someone has to accept it. We did try to throw out the BABA play again. Johnson & Johnson was another one I put out there. Pfizer was one. That one seems to be really in the doghouse right now. The healthcare sector in general. So I did several on that. CVS, I think, was another one I tried to hit on. What was the other ones? LRCX, I'm probably going to look at running some options there now that we're over 100 shares. And several others we threw out, but nothing hit, so nothing to speak of there. And no dividends. It doesn't happen very often, but there are weeks where we don't get any dividends. This happened to be one of them, so no dividends to speak of. Which brings us to the capital invested for the week. And on the 18th, that should say the 18th, not the 29th. We're not quite there yet, getting ahead of myself a little bit. But we did invest $913.86 on the 18th. With those funds, we added 4 more shares to our Haverty Furnishers Company position, ticker HVT. This is out of the consumer discretionary, another sector that seems to be hit pretty hard. I think people are starting to realize maybe we're looking at a recession coming up. And that for those of you who maybe thought tariffs were a good thing, they are not. It's really going to hurt people in the consumer discretionary, or really any goods that you buy, if we end up with tariffs. And you're starting to see companies that are really starting to take that into account, adjust pricing, and these companies will be hit hard if we hit tariffs. So we'll see how that really plays out. But for right now, this is another sector, along with the healthcare sector, that based on what just happened with the election, has been hit pretty hard. And I'm assuming that is based on what they foresee in the future with regulations, as well as, like I said, with the consumer discretionary. Anything that comes overseas that they put tariffs on will be a tax on the consumer. It is not paid by the country that sends it. It is paid by the company whenever they pick up those products at the port. That is just the reality. I have been involved in picking up products from ports before in companies that I've worked for, and we pay the tax on the product when we pick it up from the port, or they don't release it. That's just how it works. And then that cost is passed on to the consumer. So look at the consumer discretionary sector now. A lot of companies are adjusting based on what they think is coming down the pike. Now, obviously, we haven't seen that yet, but Again, Haverty Furniture, 4 shares. I'm not trying to get too much into politics, but there is some implications around the political changes that are coming up. I just want you to understand that in several sectors right now, or at least a couple of sectors, healthcare and the consumer discretionary sector and consumer staples seem to be taking a hit right now. So 4 shares there at $23.01 per share, which is well under my cost basis. Nutrien, ticker NTR. This is a Canadian company, so there are some tax implications around it. It is also out of the materials sector. Picked up those 2 shares at $45.55. Valet, another one out of the materials sector, ticker VALE, 10 shares there at $10.04 per share. Lamb Research, this is one that was on our stocks to buy for the month of November. So we're continuing to build this one out. 4 more shares there at $70.45. I'm actually hoping this one continues to stay down. I'd love it to pull back. I think it hit down in the 68 range, which is right up against the 52-week low for the week, and then bounce back into the 70s. But I'd love it to drop back into the high 60s or even lower while I build this position out. We do have over 100 shares now, but I'd like to get it to around 200. So continuing to add there. And the other one that was on our stocks to buy for the month of November list here, if you haven't seen that video, go ahead and check that out. Alphabet, most of you might know it as Google, ticker GOOGL, 2 more shares at $174.27. And this one actually really dropped back down as well by the end of the week. I think it's down in the 164 to 165 range again. So I'm going to continue to add there. I like it right now, and I want to keep my cost basis around 165 or under. So I'm going to continue to add to it as long as I can. Passive income added from the $913.86 and the new shares that it picked up, $25.59. And when you hear people talk about the dividend snowball effect, this is part of that dividend snowball effect. As you add new shares, right, like we did this week, those new shares will eventually pay out dividends. Those dividends will buy more shares, and then those shares will add additional passive income. That is the dividend snowball effect in action, right? So we are adding to that snowball right here, making it grow a little bit. The other thing that adds to it is the time that you allow those dividends to compound. And we weren't done. On the 22nd here, we went in and added an additional $538.05 to the portfolio. With those funds, we picked up 1 more share of Valet, ticker VALE, at that $10.04 per share mark. 2 to our, here's the healthcare sector I was just talking about, added 2 more shares to our CVS Healthcare Corporation position, ticker CVS, out of the healthcare sector at $57.44, well above, below our cost basis. I'd like to build this one out a little bit, even though it is starting to get to be one of the larger positions in the portfolio here. And our weekly buys. So Schwab's Dividend Growth ETF here, ticker SCHD, we're going to buy at least 3 shares. This week we picked up 4. We picked up those 4 shares at $29.31. And Vanguard's Total Stock Market ETF is the other ETF we're going to be picking up weekly, have been all year, probably will continue that into next year, if not well into the future here, into infinity and beyond. 1 more share at $295.87 of VTI there. Passive income added $14.08. Total invested $1,451.91. There's that change there. Total passive income added $39.67 in passive income added to the overall portfolio. Now, a quick run through the sector weight update here. As you can see, communications makes up 10.73% of the portfolio. Consumer discretionary, HVT, BABA have both pulled back. There are 2 that are in our portfolio. There's several others that I'm watching, Nike being one, a couple others. Target, perhaps, if it continues to drop, might be one that we throw in there. So this one might be getting some love here in the not so distant future. But it currently sits at 4.51% of the portfolio. We'll be adding to Haverty as long as it's below our cost basis, and we may look to nibble on BABA a little bit if it stays in the low 80s or drops back into the 70s for sure. Consumer staples, 9.13%. Again, another sector that seems to be hit hard, especially products that are potentially going to be impacted by tariffs. If they do that, anything that's shipped overseas, whether that's even from, doesn't have to be overseas even, if it comes from out of the country, even stuff coming from Mexico or Canada or South America would be hit with tariffs. So that's, stuff like avocados, any fruits and vegetables that we get shipped in. So this is another one that seems to be pulled back. Kraft Heinz, for example, several companies like that. We may be looking to add to this sector as well. Energy sits at 6.21%, financials at 2.86%. Healthcare makes up 12.77%. Industrial sits at 6.82%. Technology makes up the largest chunk of the pie here now at 13.16%, with healthcare in second. Materials at 8.06% of the portfolio. Utilities sits at 8.46%. REITs and real estate, there's one that we might add to as well. Realty income has pulled back a little bit below our cost basis. Might look to add to some there. It sits at 8.47%, and ETFs is 8.80%. Eventually, just the nature of adding to SCHD and VTI every week. So eventually ETFs will become the largest slice of the pie by design, and I'm all right with that. Over here to the right, you can see here is the percentages that match up to the pie, as well as the dollar amount allocated. And here it is, the total portfolio update. I do show this every Sunday. I think it's important if people are online, me included, are online talking about investing, which I think is important. It's a subject that isn't really talked about, right? When I was a kid growing up, they told us, there's three things you don't talk about. You don't talk about money, you don't talk about politics, and you don't talk about religion. Well, I think there's some of the three most important topics to talk about, but not just talk about. Actually see what people are doing. That's why I show this. I want people to see what I'm investing in. One, you can learn mistakes from what I'm doing and not make the same mistakes. Two, you can learn from the things I'm doing positive and maybe try to mimic or copy them or put your own spin on it. So again, in my opinion, it's important for you to see a real portfolio built out over time, not by a investing guru. I am not some guru. I did not go to college for finances or investing. I do not have a family that's wealthy that taught me about investing. I'm learning this as I go. So I think it's important for you to see that if I can do it, a real person who goes to work every day, married, has a couple kids, you can do it too, right? You can read what you need to read, watch some YouTube videos like I do, and invest over time. You don't need to pay someone to do it. Save that money and put it into your own portfolio and do it yourself. And if you don't understand how to read balance sheets, income statements, that sort of thing, and how to value a company, don't worry about that. Go ahead and invest in ETFs or index funds in the beginning. Warren Buffett would recommend something like VOO, which matches the S&P 500. He would recommend the S&P 500 overall. So any index fund or ETF that tracks the S&P 500, again, VOO, several others out there. SPY is another one, SPY. So anything that tracks the S&P 500 is what Warren Buffett would recommend for the average investor. I use VTI. It's the whole stock market. S&P 500 would be the top 500 companies in the United States, which wouldn't include stuff like small caps. I like VTI because it does include small caps. So I'm doing it a little bit different, as well as SCHD, which is a dividend growth ETF. And there's several of those out there. VYM is another one similar to this. So ETFs may be the way to go for you if you don't know how to, like I said, read balance sheet, income statements, and value companies. That's fine. You can still invest into the market. And time is your best friend when investing, right? It's not necessarily what you buy, it's when you buy it, and then hold it for the long term. And that includes the S&P 500 if that's the way you go. But here is the ticker, all the positions in the portfolio, how many total shares I own, current price as of the close of business on Friday, and all these numbers are as of the close of business on Friday. Market value of each individual position. What we saw on the previous slide was the sectors. This is by each individual position. Average share price, my average cost per share, my purchase price. Now this does include reinvested dividends here. So does this. Total return, whether I'm up or down, again, I'm going to show it. I want you to see whether I'm up or down. I don't really focus on that, but it's important for you to see. Sometimes you're going to be up, sometimes you're going to be down. Each individual position is going to have a 52-week low and a 52-week high, and they can touch those 52-week lows or 52-week highs or set a new 52-week low or a new 52-week high at any time throughout the year for any number of reasons, right? Whether that's a war that starts that might impact stocks that have to do with the war machine, stuff like HII or stuff like Raytheon, any kind of company that deals with the war machine out there, or stuff like tariffs, like we just talked about, that would impact any products that might be shipped into the United States from another country, right? So there's going to be news like that. There's going to be earnings reports that are released throughout the year that could impact the stock. So a lot of different reasons why a stock could go up or down. Negative news that's put out. Any type of Google, for example, right now is being hit with negative news because there's still some stuff going around the government trying to break them up as a monopoly. So you can use that news to your advantage. The microeconomic conditions throughout the year, stock drops down for no real reason, still a good company. That's the time you want to buy it. Percent return here, sector, what sector each company falls in, whether they're a quarterly, monthly, semi-annual payer. Current yield as of the close of business on Friday. My yield on cost here. Portfolio weighting. I will like to speak to this just for a second. I do have a bit of a rule here. I don't want any one position to be more than 10 to 15% of the portfolio. I don't think I'm really close on anything here. And I don't want any one sector to be more than 20 to 25% of the portfolio. I just don't want to be overweight any one position or any one sector. Estimated annual income, payout months here, dividend growth year over year, and where it sits at 15% of a 52-week low. Now, as you can see, currently I have 6,250.194 shares. Market value of the portfolio, $318,339.29. Purchase price, $288,855.31. Total return, $29,483.97. This is not what I focus on. I am up 10.21%, not what I focus on. And if you've been watching the channel for a while, you know I say that every video here, whether I'm up or down, right? If I'm up 100%, I don't care. If I'm down 100%, I don't really care. I mean, I care, right? It doesn't look good, but it's not what I'm focused on. Current yield, 3.818%. My yield on cost, 4.208%. And this is what I focus on. That's why it's circled over here in red. The dividends, the annual dividends paid out by all the different positions in the portfolio, and it continues to go up week after week as I add new capital, as the positions in the portfolio pay out dividends, and as the companies raise their dividends. That's why these are highlighted in yellow. These companies have already raised their dividend for the year, and I think we're at the end of the year where we won't see any more dividend raises. We'll have to wait to see what shakes out next year. I do have some positions in the portfolio that are not raising their dividends right now. I understand that, but that's why they're highlighted in yellow. So that's another way that the dividends grow. And it continues to go up week after week, month after month, quarter after quarter, and sits currently at $12,154.38 per share. And right now we're setting a new record every week. Dividend growth currently at 6.24%. This will adjust year over year as these companies adjust their dividends payouts year over year. Well, that is really it. Really appreciate you stopping by. Again, let me know what you're buying in your portfolio, what you're selling maybe. A lot of people right now are dropping some positions, maybe looking at the different changes in political landscape that's coming up here. Like I said, the healthcare sector really seems to be getting hit hard. Consumer discretionary seems to be getting hit hard. And I believe, in my opinion, that is because of the changes that are coming up based on the most recent election here in the United States. You take that with a grain of salt. Again, this is not a political channel. Please keep the political commentary and comments to yourself. I don't care what your politics are. I don't push politics here. But politics do impact investors. You should be aware of that. That's the only reason I'm bringing it up. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hit that notification bell. And I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a question about my portfolio, any of the positions in it, why I'm buying what I'm buying, why I do options, any questions that you have, go ahead and drop it down below. I'll try to answer them as quickly as I can. If I don't get to it, folks, I'm starting to get a lot more questions on older videos. So I'm going to say I'll try to answer questions on the videos in the first couple of days, the day of and maybe the day after I post. But beyond that, it's hard for me to get to some of the later comments on videos just because there's so many out there. I've been doing this for several years now, so there's a lot of older videos that you might be commenting on. And don't think I'm ignoring you. It's just hard for me to answer those now that we have more subscribers, over 1,000 subscribers. So again, thank you to everyone out there who's hit that subscribe button. And if you haven't done that, hit that subscribe button. I'm going to click that one more time. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I would like to say before I go, next week, I am actually leaving this evening. I'm recording this on Saturday afternoon. I'm leaving this evening for Texas. My cousin is getting married. My second cousin is getting married. So I am driving down there with my brother. So I will not be putting out videos on Monday, Tuesday, and possibly Wednesday. Probably nothing on Thursday either because it's Thanksgiving. But I will have the portfolio update video for you next week. I just am going to be doing a lot of driving over the next several days and then a wedding on Monday. So I've got some other things going on here with family obligations that I won't be able to post. I'll be away from home and probably away from the computer for a while. So we'll see you whenever I get back. Happy holidays. If I don't talk to you before Thanksgiving, happy Thanksgiving. And we'll definitely see you back next Sunday. Hope you have a great week. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.